Hey, welcome back to my live stream. Good morning. It is down day for stocks today. To end the week, it seems it's only a half hour into trading, so we'll see if the market's going to stay down for the rest of the day. But I wanted to have a live stream and talk about a few things that I think are going to set up January, and I'll get into that in a minute. Just to introduce the channel for all those that might be new, or maybe you just forgot what I'm about. Um, I've got a YouTube channel. I focus on active value investing. And what that means to me is that I like looking at fundamentals. I like looking at fundamentals for companies, but I also like looking at the qualitative aspects of a company. Some companies are more desirable than others. Why is that? A lot of things come into that equation. You could have excellent fundamentals in the wrong industry, and the stock's not going to do all that great. You have good fundamentals in the right industry, and look out. You got the next NVIDIA, you got the next Apple. So I try to put those two together and share my analysis with you and see how I go about things. I'm having a good year, but I make mistakes like everybody else, and I also pick winners like everybody else, I guess. And I'll share both. I'll share my winners, I'll share my losers, and I try to repeat what works, and I try to avoid what didn't work in the past. So as we go through, I'm gonna take any nominations, suggestions in the chat for stocks that you want to look at, or if you want to go over a topic, that's cool too. We can talk about a topic. Got plenty of time this morning. It's the last Friday of 2024. The countdown is on for the end of 2024 and the beginning of 2025. All right. So if you like this live stream, if you want to be more involved with this community, become a paid member. Either $10 plan, you get to join us on weekends, talk about stocks, go into a workshop to maybe improve some skills or go over some skills that are good for long-term stock investors. Or you can consider a even more advanced membership. The most advanced one, the super investor, I mean, I pretty much would be a little bit of a advisor coach for you, and I will share with you my portfolio as well as my active buy and sells. So consider that if that's something good for you. Love to have you in the community. And another thing, this community is active on Discord, and I encourage you to join us on Discord. It's a really active way of staying in touch with the community, and there's other really good investors in this community, and I like seeing what they have to post. You could see it too if you join Discord. Just be careful on Discord. I probably say it too much, but I'm an old school dude and I hate seeing people get scammed. There are scammers on Discord. There's scammers everywhere, but it seems like Discord has a couple of extras. So just be careful out there. Don't ever, accept a friend invite from me because it's probably somebody else impersonating me. Don't ever listen to an offer that somebody who's pretending to be me is making you, because it's probably not me. I'm not going to reach out to you. I'm not going to offer you a way of making $1 million in a week or something. That's just not going to happen. If you reached out to me, which is easy to do on Discord because my ID is kind of clearly noted and it's highlighted in red, I would accept your friend invite, most likely, and we would be good to go. So join us on Discord. You can also follow me on Facebook or Threads. Take your pick. So, all right. So, good morning, Talmiz 100. Good to see you. I think you've been on before, and it's very good to see you. So the market is not exactly crashing, but if it stays this way, it most definitely could be a crash. Let's talk about it. Android PC, good morning. And Kiter, I saw your Discord comment, and I put EG on my list of stocks that I wanted to cover. So I'm going to cover that. and good to see you, Kiter. And all right, so we're going to go over that. Let me look at the market, and then we're going to get into EG. All right, so market has opened down, and the Nasdaq's kind of taken the brunt of the down action. And I wanted to look at a couple key technology stocks like Nvidia, and talk about what I think is setting up for next year. And next year starts next week, so we're around the corner. S&P is down because those mega caps are down, and the Dow is not as bad, but it's still down. So Chevron is having a nice day. Boy, I'm a Chevron stockholder, and let me tell you, it's not been a pretty 30 days. Not pretty at all. And leaves me scratching my head, but I went through a process because technology's just been killing it, just doing great. And it's not a bad idea to stay in technology, in the right technology, to try to understand, where is the place to be in technology. No, not opposed to that. Now I have some pretty good Dow like stocks, Chevron being one of them. It's a Dow stock. And I guess this type of performance led me to entertain the idea of selling off some Chevron, but I've decided not to. I think this is my hedge. Should technology stop working in 2025, and maybe it just just pumps the brakes. It's like not going to keep going up and to the right forever. That'd be euphoria. That just doesn't happen. These stocks are going to show up nicely. So I've decided to pump the brakes on that decision. I've built up enough cash in December here to have a lot of dry powder. Going into January, thinking there's going to be a pretty good pullback, and there's a couple of reasons behind it. First is that a lot of people are postponing selling out of positions because of tax reasons. Totally get it. Taxes take a little bit of your profits, and if you could avoid it, you try to avoid it a little bit. If you can postpone it by a year, if you wait a week, you can postpone it by a year. So it's a really good idea. So I think there's going to be some selling behavior at the beginning of the year. There are some forces on, technology that can really cause a pretty good sell-off, correction, pullback. We'll see what happens. And I could be surprised. We can get into January and stocks rally again. But, I try to stay current on the market and sense what I think is going to come. And I would say at the beginning of the year, January, February, pretty good pullback. Doesn't mean I'm selling a lot of my stocks. I think I've cleaned up what I wanted to clean up here in December, and I'm ready. I've got dry powder. If the market decides to sell off, I've got enough capital to buy into companies I really want to own. I'm still buying into some stocks that I really like. I just started 4 new positions, and I shared those. I think I shared them on yesterday's live stream, and put them on the Discord. So, hey, man, you want to know what's going on? Get on Discord. You'll hear of what's going on, and other good investors like Kiter. He's active on it. He's got a lot of good things to say. And getting to know investors is a good idea. And if you allow me to say Kiter's, I'm gonna say what I think, and I could be right or wrong, but he's a value investor that focuses on income, which is good. I understand his point of view. And when he looks at a company, I really value what he has to say, because it's just one more data point, one more perspective on a company. And we have members that are young, and, I want to make sure that we all stay in our lanes. If you're young and want to build wealth, go for growth, go for companies that are going to double your money quickly, and they're going to double it, several times. So that way, if you're 30 years old and you put $10,000 on a particular stock, you wake up when you're 60 years old, you got $200,000 sitting there. That kind of, compounding and, eventual wealth building. So I think there's, investing is very personal. You should take it to, what specifics, do you have? What's your age? What do you intend on doing? How risk averse are you? There's, taking risk is, I would say that the way the financial services industry sometimes communicates is they treat risk as like this evil, like this, oh my God, you're swallowing poison or something. And it's not that at all. I think having a good tolerance for risk and being able to gauge risk and be able to make a good, risk to reward decision, that's a skill. And you don't get there by never doing it. You get there by doing it. So, whether you're 30 years old or 60 years old, you should have a good sense of what's your risk tolerance, what kind of risk do you want to take? Do you enjoy taking risks? I do in certain occasions. I really do enjoy it. Um, you know, it's similar to I'm a big fan of NFL football and going into the games on Christmas Day, not yesterday's game. Yesterday's game was a dud. I had very little interest in it. But going into Wednesday, I was really curious to see if the Chiefs were going to be met with a pretty strong opponent in the Steelers, and the result was not very competitive. But I would probably entertain, and I'm not a big gambler. I don't really gamble on sports, but I go through the rationale and say, well, I'd love to see the Steelers put up a good fight. It's really tough to bet against the Chiefs. And that's an assessment of what you think is going to happen. And same thing with stocks. You can look at markets and say, well, in the case of Chevron, they're the second biggest energy company on within that industry, very well run. And what do I think is going to happen? Well, I think over time, Chevron's going to continue to be an important company. And by me staying in the stock, continuing to own it, I'm taking a risk. If I sell it, I'm taking a risk. If I buy more, I'm taking a risk. And I'm very comfortable with Chevron. I think it's a really well-run company. But I think those are just topics that go through my head, and that I would probably teach my two sons is, risk taking is part of life. Whether you decide to take a career path that you think is, the best one for you, you decide to buy a house, all those things, right? There's some unknown out there that you're going to have to make a best decision you can and go with it. So risk taking, it's a skill set. Work on it when you're young, study, make bets, but don't bet the farm. The whole you only live once attitude. Yeah, you only live once, so don't blow all your money. If you keep betting it all, you're probably going to end up with nothing at some point. Just the chances are, if you're good at math, you understand what I'm saying. If you just want to play and end up with nothing, then you only live once attitude works for you. All right, so the indexes are down. Looks like the NASDAQ has had a little more selling off. S&P is down. Russell's down, but not as much. Okay, what's crypto doing? Bitcoin is down. Ethereum is up. Interesting. Okay. And I think that's all I want to see there. All right, so we've got EG on the board. If you want to see a stock, put it in the chat. Can you look at a nice stock? So I'm not following your comment. Talmiz 100. Can you look at a nice stock? The answer is yes, but I don't see a symbol. So pop it in there and we'll take a look at it. ACAP investing, just park some capital in 3 ETFs. So you just park some capital in 3 ETFs. Can't seem to find a company that you're overly excited about right now. The ones that do interest me are too expensive right now based on free cash flow multiple. I would say that I'm in kind of your zone of thought. Um, the market's expensive, so just realizing that and seeing that, hey, what has really been working for the last 2 years is really expensive. Is it going to keep working? Possibly. Could it really pull back? Yeah. So there's that out there. I would say that, there's always stocks that are unappreciated. I think healthcare is a pretty good little area. We've looked at some insurance companies that look pretty darn good, but I agree with you that it's expensive out there. If we have a solid pullback, a solid correction, then we might be sitting on a wow, everything looks really well priced, everything looks discounted. That's where we were at the end of 2022. Now, call it 3 years later, 2 years later, excuse me. Um, we're sitting on the opposite side going, okay, it's a little expensive out there. And that kind of supports my expectation that we're going to have a pullback in early 2025 of some sort, because you're not the only one thinking that way. I, listen on YouTube, and I go to some pretty legit resource or sources of investing. And these are real investors that are putting their hard-earned money into the market. And they also agree that, you know, some markets are just overheated. Let's look at a couple of examples in the live stream today that kind of support that expectation. I'm going to go there, and then I'm going to come back to EG because I wanted to go over EG. All right, so the first stock that is going to be the stock to watch for 2025 is going to be NVIDIA, an exceptional company. I underestimated them. I owned NVIDIA a long time ago. Really appreciated their accelerated computing, their GPUs. And NVIDIA started with creating GPUs to accelerate graphics for gamers. So when games continued to get more and more advanced and they needed to be, the computers couldn't keep up with the graphic load, NVIDIA came out with their accelerator and boom, gamers were happy. And then that technology was used in a couple places. One of them for Bitcoin mining. So you see the Bitcoin miners using GPUs for that reason. And more recently, the use case has been to build AI. And you have these large language models. And to kind of summarize, a large language model is this massive data set. And you're trying to teach a application, a software. You're kind of, if you think about a human being, right? They're born and they don't know much. It's a little baby, and then over 50 years they learn a tremendous amount, including all their, upbringing from their parents, relatives, friends, teachers, all through their, elementary years, and then college, potentially career and all that. But what you're trying to do is teach a computer all these different permutations and experiences to kind of resemble the human, intelligence, artificial intelligence. And you're trying to accelerate that. And so it becomes a very, very expensive and big workload. And NVIDIA handles it exceptionally well, better than anybody else. And that's why their demand on their GPUs went through the roof. When it was expected that many companies are going to build large language models and operate AI businesses. And I underestimated it because I do think that AI is super interesting, but I just don't see it kind of taking over. When we look at like Gemini as an example, I use it, but to me, it's kind of a leap forward from search. It's not like, man, I do everything on Gemini or do everything on Meta AI or everything on ChatGPT. No, I actually hit the wall with those because I often ask for a specific and it's wrong, or I ask for specific information and can't do it. So I'm like, okay, well, I don't know if it's 20% of the time, 30% of the time, AI truly has a meaningful benefit to me. But That's why I was underestimating it. But now the market's kind of faded for NVIDIA. We could see that from middle of the year to now it's flat. Okay, so we're talking about a really expensive company, $3.3 trillion of market cap. The company's gone up in 5 years 2,180%. So we're talking about an expensive market. And NVIDIA is going to be, all eyes are on NVIDIA. Now, you're going to get they announced their earnings on February 20th. But you're going to get a preview of what to expect with NVIDIA as the big consumers of NVIDIA GPUs report. And those are Microsoft, Amazon through AWS, Google through the Google Cloud. Those are the three big ones. And there's others too. And if any of those come out and say, hey, we're pulling back on capital expense related to AI because we have enough, or we're just not seeing the demand, that's going to be a tell of what's to come with NVIDIA. Now, when we look at NVIDIA, the growth has just been incredible, right? They, as recent as fiscal year 2023, which ended January 29th of 23, this is right after the year that we had a correction on 2022. They weren't growing, right? This is a cyclical business. See how we have negative? So we have positive, positive, negative. And I don't know if I have any more years to go back on. Yeah, we have some more years. So we have slow growth, high growth, high growth, slower, slower, high growth, slower. So you have these, years of a lot of people buying those GPUs and then they fade. Now, AI is a different animal. I would agree that the build out for AI is extreme. I would agree with that. But I don't think the semiconductor industry is going to stop being a cyclical industry. And I think of it logically, which is when you buy a GPU, it's not a consumable. It's not like, hey, I bought this GPU, I used it and I threw it away. No, you buy it, you use it for 5 years, you might use it for 10 years. If the technology advances fast enough, you may decide to upgrade, but it's not because the component wore out. It's because there's a better technology that's going to serve you better. And case in point was my son decided to mine Bitcoin in 2016, and we bought NVIDIA GPUs, 2 of them, and he put them on a mining rig and he used them for about a year, and then we sold them. Resold them. So he used them for a year and then resold them. We got more money than we originally paid, which was interesting. That's my point, is these things last. So as you see enough supply in the market, NVIDIA themselves see a decrease in demand, and we'll see if that comes back. The one thing that I do study is that the law of big numbers, right? When you look at their growth, it's incredible, 152%. And they're comparing the trailing 12 months against the trailing, the previous trailing 12 months. Now, for the full years, you see that when you went from 26 or 27 billion in revenue, which were at a very slow growth, almost zero. Yeah, you're going to see 125% growth. But now you're going to be comparing against some big numbers. So let's if their year is going to end, so it's January 28th, 2025. And we have to add up these quarters, right? So it's going to be 26, 56, 61, 91. It's probably going to be about 120. So they're going to double, but then after that, they're going to guide and say, At what growth rate are we going to be? And that's what's going to make or break the NVIDIA stock. And they may guide very favorably because, frankly, why wouldn't, the CEO or any employee say, "Hey, I love my company and we're gonna kick butt and take names. We're gonna kill it. We're gonna keep killing it." So I could totally see that. But the data is going to tell us the true story. And this is going to be the big event. This shows November 20th, but you forward 3 months and it's expected they're going to announce around February 20th. And that's going to be a huge earnings announcement. And then after that, 3 months later, which would be April 20th, a huge announcement. And the reason for it is this stock is so expensive, right? You see the stock that's built up this way. You see that, hey, I showed that from this point to now, it's pretty much even. So the stock is not moving up. And you see that for the 1 year, it's up 174. Well, there's a lot of stocks that have already, for the 1 year, have surpassed 170, I guess 175 at this point. And so this stock's going to be super interesting to follow. I will be following it and see how things play out. But this, along with other announcements, like let's look at Apple. And Apple has surprised me in 2024 because their stock keeps going up, which is so impressive, up 32%. It's almost a $4 trillion company, yet they're not growing. We're coming up on 3 years of no growth. It's like this super expensive stock, and they're not growing. They're buying back shares. Okay, that's a positive. They generate a lot of cash. That's a positive. There's a lot of positives there, but there's also threats, right? A lot of their growth is in Asia, China. And I don't think I need to tell anybody the tension between the US and China is pretty high. And I think that could start weighing on Apple. So this stock is interesting to look at and go, this stock is worth that much and it's not growing. They had a negative growth year in fiscal year 2023 that ended in September 30th of 2023. It looks like they just ended a fiscal year. So we'll see. We'll see where they can pull out some growth. And when you think about the Apple story, what is that next big idea for Apple? There are none. They're working on a car. They abandoned that idea. They are behind on the AI paradigm, I guess. And those who are leading are, for sure, ChatGPT is a new small company that is making a lot of noise. But from Apple's kind of rivals, the big ones, I think Google Alphabet's in the lead because they were investing in AI. They have real AI, like the robo-taxi business from Waymo. They truly built a big AI business. It's real. They get to make money on AI through their Google Cloud business. Gemini just showed you a minute ago. And I think Apple's way behind Google Alphabet when it comes to AI. If AI starts becoming something, Apple's going to be way behind. And they're going to try to use their network power of, hey, we got this phone, we got this iPhone. That might work. But if it doesn't, holy smokes, I think we're going to have a pretty painful road for Apple. We'll see. So this one's an interesting stock to watch. I tip my hat to Apple. They keep getting more valuable. And to me, I'm not excited about the stock. I'm like, this is not growth. If you look at Microsoft, I tip my hat to Microsoft because they are a very expensive stock that keeps growing, 3 trillion. But look at this growth. That's what you're supposed to do. So, okay, this makes sense. This makes a lot more sense than Apple. So So we are in an expensive market. I totally agree with the comment that was made earlier. All right. So next is EG. Let me catch up on comments. Android PC. Howard Marks has pronounced perspective on risk. He emphasizes that risk is not just about the possibility of losing money, but also the opportunity cost of missing out on potential gains. I agree. I agree. And there's, you know, I have relatives or I love them and they just, they don't, they're not passionate about investing like I am. And they're like, well, I don't want to take the risk of going into stocks. So I'd rather be in savings in CDs and they earn their 3%, maybe 4%. And I try to politely say, you're taking a different form of risk, which is you're taking a risk that you're going to wake up 20 years from now and the whole world is 50% wealthier than you are because you stayed in investments that only earned 3 to 4%. And if you compound that, you didn't get very far. But if you get into equities, which are proven over a long period of time to do, 12%, 15%, maybe 15% is being ambitious, you're going to compound your money much faster. So I agree with you, which is people, it's almost like you buy insurance. Let's say you have a car, that car is worth $30,000 and you're really afraid something's going to happen to that car. So you buy insurance and you pay $10,000 a year. So in 3 years, you basically paid $30,000, the equivalent value of that car. I haven't done the math on that, but that's just you're overpaying on insurance. I'd rather take the risk and not insure the car and save $10,000 a year. Because in 3 years, if I didn't wreck the car, I feel like a total winner. And if let's say after year 2, I wreck the car and I'm out 10 grand, really am I out 10 grand? I just saved 20 grand and I get to buy a new car. So, interesting conversation, but I think philosophically, Android PC, I guess Howard Marks, and if you agree with him, you and I are on the same page in the same neighborhood of thought that, yeah, risk is a two-way street. Yeah. And, diversification enables us to, you can have a part of your portfolio that's super risky. I'm in cryptocurrencies, right? That's super risky. Like, especially when I started buying in 2018, that was like, man. So I bought very small amounts and I wanted to learn something and I took a risk and it paid out really, it's done really, really well. I've also made some investments that have gone bad and I've made some investments that have been awesome. Risk taking. And I think my skill set to take risks continue to get better. And yours will get better if you exercise your risk taking skills and you learn something and you keep learning, you keep getting better. Rotel and Cheese, what's up, man? You are becoming a usual suspect on this live stream. I have MBot Beach. Cool. So MBot, take a glance at it, and VHAI. Any thoughts on GTLB? They've been growing their numbers. Stock price is still below all-time highs. Let's take a peek. Just hang in there because I've got a couple ahead of you, but I appreciate the suggestion there. Real Madrid, good to see you again, man. I think that's why Buffett, I guess, started selling out of Apple. No growth. Yeah, no growth. It's Apple may become like the biggest value trap that ever came, but we'll see. Brandon V. So how do I use options? I'm going to come back to that. I do use options a little bit, Not a lot, and I'll explain why later. Okay. All right. So thanks again, everybody, for joining. And I'm going to get into requests. I know that I've got probably about 4 or 5, including the options question. So bear with me as I go through and cover kind of in the order they came in. So EG is in the insurance business, and we've looked at this company a few times, and I think it was N. Kiter that asked about this company or saw it from a report that he saw. I forgot the publication, but these guys are in the reinsurance and insurance products area. Insurance has really been working in 2024. I don't see why it won't keep working because their fundamentals look really good. This company has a market cap of 15.5 billion, revenue of 16 billion, and PE. Look at this PE, ridiculous, 5.6. Nvidia was at like I forgot how much. How much are you at Nvidia? 53, which isn't bad, by the way. If you want to be shocked, look at Palantir. So that's looking really good. The dividend, 2.2% dividend, looks pretty good. Analysts think it's discounted by 18.5%. Now let me take a peek at their website just to kind of get my head around, if anything, what the brand offers here. So okay, so they underwrite, they provide insurance. And there's some companies in the insurance business that they kind of label themselves a risk management organization, which and those tend to be like unique policies. Like, hey, I want to insure this very rare or unique situation, and they do that. These guys here, okay, what we our offer, and see what we got here. So I'm not getting my head around what these guys do. It's like, do they do business insurance? Make this a little bigger for you guys. See if they can give us a quick. All right, here we go. So diversified reinsurance and insurance of P&C franchise. Okay. So they, the way insurance companies, the reason why they're really good businesses is they offer insurance, and whoever's receiving that policy or buying that policy is paying a premium. And those premiums are pretty much collected, and then over time, the insurance company will have to pay on claims. And there might be a period of time when they get to take that money and invest it. And that's why they have two forms of income is, okay, we're going to make money because there's going to be a profit margin on the policies that we sell. They have very intelligent actuarians who are mathematical geniuses that figure out, well, if you sell this type of policy, you're going to have claims up to this level and we're still going to have an adequate profit margin. And then while you have the money, you get to invest it, which is one of the reasons why Warren Buffett bought Geico. He loved the fact that you had all this premium cash that you get to invest and make more money. And Warren Buffett has recently bought into Chubb. So, all right. So I have a sense of what they do as a business. Let's get back into looking at their fundamentals. The company is growing nicely. It's been a growth or not a growth, but it's been a growing company for some time. They did have slow growth in 2022. I think there was adjusting that needed to be done in 2022. A lot of assets went up in value and they had to be, the policies had to go up in price because the assets they were covering had a greater value. So that made sense. I know that was a pretty good. One of the reasons why inflation was going up so fast is insurance was costing a lot. And understandably, if insurance companies have to pay more, they have to charge more. It's like a 1-to-1. All right. So they're growing nicely. That looks good. Very good free cash flow. And the cash flow is growing really nicely over time. Nicely done. And so their profit margins look good. Free cash flow margin looks good. So that looks really good. So they have $5.2 billion of free cash flow in the trailing 12 months. Yeah, these guys are highly discounted. They're making, so their market cap's $15.5 billion. And in 1 year, the company produces free cash flow, cash they can buy back shares, they can dividend down, they can put it on the balance sheet of 1/3 the market cap. That's very high free cash flow. And I don't know that things are going to change all that quick. I think the cash flow is going to be consistently coming in at that level. So that looks really good. As I started with, insurance has really been working. You can see the fundamentals are just tremendous. Revenue growth, free cash flow, profitable. Taking a peek at the balance sheet. They have $5.5 billion of cash, $3.4 billion of debt. So they have a surplus of cash of $1.8 billion. Beautiful. I'm going to look at their dividends and see if they're buying back shares. So payout ratio. Looks like they issued out shares. Maybe. Okay. So this looks really good. And within insurance, a lot of companies look good. Chubb looks good. I started buying into Chubb yesterday. I'm an Allstate stockholder. I've been doing well, and I'm probably just going to hold my shares. And Everest Group looks really good. But just about every insurance company we're looking at looks great. To compare EG with a couple of other insurance companies that I'm familiar with, see how they've been doing against these guys. So we have Progressive, which did really well. And then we've got, let's go with Chubb. And then we'll pop Allstate in there. So these guys over the 1 year. So it looks like Everest didn't do as well, but you saw their fundamentals. They're really, really good. Chubb is in second place. Allstate is in second. I'm sorry. I kind of said that wrong. I guess in fourth place was Everest with a 3% rate of appreciation over 1 year. But that could mean that they're discounted. They're just not recognized, maybe smaller than the others. Of course, Progressive is probably very well known. They have funny commercials and it's fun to watch them. And they're up 53% in 1 year. and they're growing really well, really good company. Allstate did well, 40%. They're doing well. And then Chubb is up 25%, and I think have stronger fundamentals than Allstate and Progressive, which is why I started to buy into them. And Everest looks great, but it's kind of been lagging the other players in the industry. In insurance, the way I'm going to play it is like I'm finding small caps in technology, and especially biotech right now is like there's the good opportunity in biotech that I'm finding. And I'm going small caps in those spaces. And with insurance, Allstate's a bigger cap, Chubb's a bigger cap. I'm fine with those. I'm probably not going to go to a small cap for insurance. And I'm good to go on insurance, but I could not argue with somebody buying into Everest. It'd be like, it looks pretty good. It looks the fundamentals look really, really good. So all these companies look good, but pick the one that's right for you. So I think that was pretty good little newsletter you got, and Kiter. EG looks good. All right, so working down the list, somebody asked about M Bot. Microbot Medical. Are we going to get into biotech, healthcare, medical instruments and supplies? Well, I like the name, Microbot. Microbot. Huh. What do these guys do? So you have like gamers doing surgeries? Where are these guys headquartered? So in Massachusetts, Braintree, Massachusetts. So our company was founded by thought leaders in surgical robotics with proven track record of building companies. Their vision is to pave the way to the next generation of surgical robotics by transforming robots from large pieces of capital equipment to accessible single-use robotic systems. The Liberty Robotic System is the first iteration of our goal to rethink how robotic systems can change healthcare. But we continue to stay focused on how the ecosystem around robotics can be reimagined and evolve. Very interesting. All right, so we're talking about robotics, and they have a press release December 10th. Okay. All right, so market cap 18 billion, no revenue yet. Strong buy. It's going to go up 560%. Woohoo. So they are pre-revenue? Yeah, they're pre-revenue. This isn't my game. It's not something I can enter as an investment. It's interesting to see. If you have the knowledge in this industry and you think, yeah, this is going to work, then that would be potentially a good investment, is how my mind works. I'm not a doctor. I'm not in the medical profession. I worked at a pharmaceutical company as an accountant, but I've never worked at a robotic company for surgeries. This one's pre-revenue. Yeah, this could be a home run. this could be a total loss, and it could be in between and 18 billion. Wait, 18 million, excuse me. Everything's so expensive nowadays. 18 million. So if this thing works, it's a nice payoff. Now, there's some things that I would look at if I was told, you know, hey, analyze this company and tell me what's the viability. I would look at, okay, what's their balance sheet? How much cash do they have? How much cash are they burning? That's an important thing to just be aware of. And hey, Mike, I see you out there. One second. Good to see you. Yeah, you're busy this time of year. No worries. Happy holidays. Good to see you. Thanks for checking in. All right. So let's take a look at the balance sheet. Since they're not making any revenue, right? Total debt, and this is so they have 4 million in cash, and this is an actual number, $94,000 of debt. Very smart. Okay. You have 4 million and you have debt of 94,000. Okay. And now let's take a look at your cash flow. So they're burning about, is this in millions or thousands? So this is in millions. And they're burning about 9 million a year in cash. They have 4 million in the bank. They're not selling anything. So where's the next chunk of cash coming? Who's going to put it in? Are they going to get investment from another company that wants to be a part of this thing? And that's important to understand. Are they going to issue out more shares? But cash is getting scarce at this company. You got a little over 4 million and you're spending 9 million a year. So you got what, 4 or 5 months left. So they have to get, their CFO has to be looking for more capital, a joint venture, something. But you can't survive if you deplete your cash. You can't pay your employees. You can't you freeze. Without cash, cash is like blood in the bloodstream. No blood, you can't function. It's just not going to work. So that's super risky. If they're going to figure out in the next 4 to 5 months, awesome. They got to get somebody to put in some money. And what may happen is, if they're desperate, they go to some private equity group. They put in some capital, but they get a very good portion of shares, and they liquidate the shares. The rest of the stockholders are somewhat being their shares are being diluted excessively, which could be a problem. This is way out there. It's not something I'd invest in. We talked about risk taking. This one's way over the line. If it was in an industry that I really knew and really had really good knowledge on, maybe, but it's not. It's not something that I'm into. All right. VHAI. Wow. So we went from tiny to microscopic, $716,000 market cap. And they do have revenue of $13,000. This is US dollars. Yeah. Where are these guys headquartered? So Vocadia Holdings develops conversational artificial intelligence. Okay, so they do AI. All right. And I've been telling myself that I want to get a new phone because I want to get the Google Pixel with the AI, and I think you could have conversations with it. Maybe I'll do that. So this is a tiny cap. The revenue is really bad. This is not investable. The current quarter is nothing. I mean, the conversational AI is already out there. You have like SoundHound, you have companies that are out there that are making money already. And if these guys are going to try to catch up and they don't have the right capital, you're trying to catch up against like Google and Meta and ChatGPT. I mean, they're like so far ahead of this company, and those guys are going like 5,000 miles an hour. Can these guys catch up? I don't think so. There's a reason why it's priced the way it is. So this one, I can't provide any opinion on other than just not an investment I could even put time into. Okay, so GTLB. GitLab. So GitLab, through its subs, develops software for software development lifecycle. This company was almost acquired by Google Alphabet, I believe. Yeah. So um, Google Alphabet was interested in acquiring GitLab. Now that's a good data point because if it's good enough for Google, it's good enough for me. 9.2 billion. Revenue 711 million. Okay. Forward P is 72. They have a forward P. That's good. And it's a strong buy. Okay. Good growth. And what GitLab does is they're basically like in a platform where if you have software development teams, projects, they do it in GitLab. So when you develop software, you may kind of divvy up the work like, hey, you handle the database. Hey, you handle the user interface. Hey, you handle security. Hey, you handle this, you handle that. And they all work in this platform so that they can connect their work together and then end up with a finished product that works and functions. That's what the company does. So it's kind of an infrastructure play on software. They are growing nicely, 32%. Revenue is 711 million. Looking at the quarterly, nice consistent growth. Looks good. They are going to be profitable, I think, next year based on the PE ratio. Gross margins, 89%. Nicely done, GitLab. That's phenomenal. That's beautiful. They're not free cash flowing yet. Not a showstopper. Now, this is an industry that I'm familiar with. I have worked in software for a while. So this one here, what has it done? GTLB. What has it done over the past year? It's down 11%. I'm sure when did Google cancel the plan to acquire them? I don't know when they canceled it, but I wanted to see if maybe it was around this date. So that looks interesting. Overall, it's down 50% over the last 5 years. So let's take a look at their financials and see if we can project if these guys are going to be profitable, if they're going to generate cash at some point. So here's GitLab. So the revenue is good. And I'm going to get to the quarterly for a reason. I want to see if they're trending to be profitable, if they're trending to generate cash. free cash. So they have good gross profit as noted. So they have very high selling, general, and administrative cost. And they are getting better at their operating income. See how the loss continues to get smaller. They have a little bit of debt, so they have interest. No, they have interest income. They have cash on the balance sheet. Okay. So you can see that their pre-tax income, the loss has gotten better. So that's good. And then what's the story here? They made some earnings from discontinuing operations. So they sold something. And they had a net income, but this is not for continuing operations. So this is getting better. And why is this so negative? That's a big, ugly number. Yeah, that's a big, ugly number. How come cash flow got that bad? So here's free cash flow. So you had your net income. And this is change in operating assets. I guess they had an asset appreciation that they had to undo. And that's a negative effect on cash. So this one needs a little more time. I wouldn't put my hard-earned money into this company just yet. I would follow it and see a quarter or two of them showing me, okay, we're going to be profitable. Here's my line of sight. Like Uber is an example. I saw the line of sight to profitability and free cash flow, invested. And that's when I started investing in these young companies. Is I see that you're going to make it, so I'll be an investor. Maybe I'm not that, angel investor that is going to make, 100 times as money. But hey, if I time it right, maybe I'll 5x my money over time. So this one's a pass for me. They're just, they need 2 really good quarters. They need to show us that they're going to be profitable. They need to get their cash flow to be positive, and then we'll go from there. The fact that Google canceled on them, maybe that's also kind of a tell. Maybe Google looked at them, looked at their financials and said, whoa, this is a big bag of problems. Maybe. I'm just imagining why they canceled, and I don't know why they canceled exactly. So that's GitLab. Thanks for bringing that one up. That one was interesting. So next is the question on options. So I've used options and regretted using, selling calls on my stocks that I own as well as puts. And the reason for it is that, investing is inherently difficult because of a couple of reasons. One, there's hundreds of millions of people around the world investing in stocks, and you're somewhat competing against not necessarily all of them, but at least people that are in spaces that you invest in. So it's already really, really difficult. You're making decisions on an array of fundamental data sets that you're looking at, calculations you're making, decisions you're making along the way, qualitative evaluation of their industry, qualitative evaluation of the market, all these things, and then you make a decision. It's already really difficult. And options just complicate it even more. Now you're saying, okay, on top of all that difficult, tricky work, I'm going to overcomplicate it by selling a call or selling a put or buying a call, buying a put. So I more recently on super expensive stocks, I've been buying puts on a couple of them. And I'm really trying to be careful not to do it too much because it becomes a distraction. That's as far as I'm willing to go. It doesn't even register overall my portfolio. It's small. Options are too super small. I want to make money every single year. I want to make a lot of money every single year. So if I found that recipe, I'm not going to abandon the recipe. I know that some people use options and they're really successful with it. The stories that I tend to see is somebody with little capital found the right option, I would say journey, and turned 100 grand into $3 million, $10 million. Congratulations. But, you know, if you got a couple million already, why would you risk it with options? And options are really, really difficult. Investing in stocks is really, really difficult. So, if anything, I'm always looking to simplify and have a simple recipe for success, process, and repeat it. And if it's simple, I get to learn something. Hey, I expected, for example, I talked about Chubb earlier. I put it through my process. I made a decision to buy it. Let's say that ends up going poorly for me. I lose 30%. And I'm looking at it and you know what? I think the error I made was I expected them to grow at 8 to 10%, and they didn't grow at all. Okay, well that's a variable that I got wrong. Let me go back and study. Could I have gotten it right? Was there information available that should have told me they're not going to grow? And that's because I kept my process consistent and simple. You go into the options realm, that's kind of out the window. Options and mathematics and the timing, it's just not a space that I think I need to use for me. If you're a young investor, it's kind of cool to see, like, the guy who made all the money on GameStop, Roaring Kitty. That's pretty cool to see that he did that. It's pretty cool to see people do feats that are incredible. For example, like motocross, right? I rode mountain bikes for a long time, and I did dirt bikes for a long time. And I would see some of these X Games kind of guys that would jump their motorcycles like 100 feet in the air, do backflips, and do all this incredible stuff. I think that's incredible to watch. I would never do that, ever, because the price for making a big mistake is potentially your life, your handicap. I mean, just a lot of bad things. And options is similar. It's like, wow, it's really cool that Roaring Kitty made all that money. But the price you're going to pay potentially is your net worth. And man, that's a big price. It's like, why the hell would you want to do that? Now, as an investor, if you're young, if you're 30 and you work hard, you make money, you save up your money, you save more than 10% of your income in any given, month, quarter, year. One exception being you buy a house. Okay, you spend money on that down payment, but that's an investment in itself. It's almost guaranteed you're going to be wealthy if you continue to be a saver and a smart investor. You learn to make money at night. It's guaranteed you're going to be wealthy. Where when you play the options game, it's like, some people are going to be a highlight, like these guys that jump motorcycles in the X Games and fly 200 feet in the air and do 5 backflips, and in the moment are like, looking glorious. But hey, man, I'd rather just mountain bike every day and have fun with it. And over time, you'll become wealthy. So you pick the path you want. If you're tuning into this channel, most likely you're a value investor, you're a long-term investor, you're kind of investing with a mindset that, hey, every year I'm getting better. I'm going to have a fortune, but it's going to take years. That's my mindset. And that's why options are not a big part of my investing. So, all right. And covered calls are sometimes okay if you can limit your upside. Yeah. And here's one thing where selling calls and puts, selling calls specifically, really backfired for me. Is I would say that, yeah, I sold calls. I made a little bit of income, but it threw me off of a couple of stocks that were super winners. And if I would have kept those stocks, literally multiply the money I made times 10. That's what I lost in potential gains. So it's like, just get back to my process. Make it simpler, simple, simple, simple. Learn, 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 become better, 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 and make more and more money. So that's my mindset, just sharing it with you. But I appreciate everybody's point of view on it. All right. So we talked about options. Rotel and cheese. PRCT is high growth. So did we go over? No, we haven't gone over this one. PRCT, Procept. So I'm going to go. Let me catch up on comments, and we're going to get into this one. Genetics Smite. Good afternoon. I am doing great. Thank you. Yeah, I don't do covered calls. They just commented, I'd rather just see Robinhood's a good example. It's gone up more than 200%. Man, I'm glad I didn't sell a covered call. Because I'm making more money on that. There's a safe way to sell options, not too risky. You know what? If it works for you, awesome. Congratulations. Again, I'll share my journey, which is, they work 80% of the time, but the times that it didn't work and actually took shares away from me, when I look back and I look at the numbers, I lost a lot more money than I gained. The income from selling these calls, I'm going to call it a tactical win. Like, hey, I won a little bit. Great. But again, on a couple of stocks, it was a strategic loss. And those strategic losses, it threw me off my game. I should have been investing more in those two stocks. And it was a big loss overall. That's what I learned. And again, I try to learn from everything. And I've decided, you know what? I'm not going to do that anymore. I might give up on a little bit of income, but I'd rather just keep some big, big winners longer. But thanks for sharing. Let's get back into Procept Biorobotics Corporation. Surgical robotics company focuses on developing transformative solutions in urology in the United States and internationally. Okay. So they sell an image-guided surgical robotic system for use in minimal invasive urology surgery. Very cool. So this is really working. So I was with a friend a week ago, actually Saturday, so 6 days ago. And he had a surgery 4 or 5 days prior. It was a significant surgery. They made like 6 incisions. And he was walking around like 4 days later, and I'm like, whoa, that's great that, they're doing surgeries that people can recover that much faster because they only made really small incisions, and they were able to work on his body without like completely opening up the area. Because oftentimes the surgery that you have is not necessarily, hey, they had to remove a small polyp from somebody, right? And they're digestive. Okay, that's fine. But when they old school, or the way they used to do it, if they had to open the person up, it's not the removal of the polyp that was the big recovery thing. It's the big incision and the potential infection and all kinds of stuff. Now with robotics, they're making it so the healthcare is just so much better, and the patient recovers that much faster, less expensive, because they don't have to be hospitalized. You don't have the potential of, infections or other complications due to the incision. So everybody wins. The patient wins, the hospital wins, the insurance company wins, everybody wins. So let's see if this is a winning company. Market cap 4.4 billion. Revenue, okay, they have revenue, good. They are losing money, okay? Up 91% 1 year. Wow, look at that. All right. These guys are pretty good size outfit, 626 employees. Really nice growth. Really nice growth. I think I let off the call today or the live stream saying that there are pockets of opportunity, biotech, and I'm putting this kind of in the neighborhood of biotech, healthcare. That's one of the pockets that is really looking good. All right, so these guys are just growing really, really well. So their equipment is really being adopted well by hospitals. Okay. They are losing money. They have good gross profit. They have selling, general administrative. So that's they need to scale up. As they get bigger, this is going to be a lower portion of their overall revenue, and they should be able to hit profitability. So they are burning cash. They're a young company, okay. Gross margins of 57%. Those are good. They're not stupendous, but they're good. All right. So they're burning cash. They have good growth. How much cash do they have on the balance sheet? They have 196 million in cash. They have 82 million in debt. So they have a net of 114 million of cash on the balance sheet. When we look at their cash flow, they're burning about 100 million in cash. If you look at their capex and their operating cash flow is negative. If we look at the quarterly, is it getting better? It looks like it is. The run rate is getting smaller. So that's good. So they have enough cash for about a year and a half. If they keep getting better in these metrics, maybe 2 years. Now, the sales looks really good. This looks excellent. And over time, their scale is going to enable them to reach profitability and to reach free cash flow. So this one is going in the right direction. Growth looks great. The fundamentals look good. They keep getting better. It's in a good space. This is a good one. This is a good one. Now, if we look at the 1 year, man, they had a good day here. Stock looks a little expensive. It's been pulling back. I like the stock, but I'd probably want a little bit better price. Something happened here, October 24th. The stock just shot up. October 28th was their earnings. So the growth is really exciting investors. I think investors are realizing these guys are going to make it. This is going to be a valuable stock. So they announced, but after they announced, the stock hasn't done anything. It's down 15%. And the last time they announced, same thing, went up and then it settled down. So if you follow Maybe it could drop a little bit more, especially if we have a pullback here in January, and then pick that one up. But most definitely this one here, I'm going to put as one of the. So what I'm going to do on the Friday after hours live streams, I kind of am tracking the stock tips that I thought were the best ones. And this one's going to be on my stock tips list for the week. I want to watch it. I don't, you know, maybe it could drop a little bit more, put a little bit of capital into this one because there's a lot of things going on here that I really like. Thanks for bringing it up. Yeah, this looks really good. Looks like they've been publicly traded since the 2021 timeframe. And man, looks beautiful. Great. Good job, Procept. Good one. All right. So, Rotel and Cheese, thanks for bringing up Procept. All right. So, got it. Yep. We went over that. Gross margin, free cash flow are game changers for me. Once I fully understood both, my investments really began to grow. Now they are almost non-negotiable for me. Nice. ACAP investing. Do you have like a channel or why is your handle ACP? And I'm going to. Whoa. I don't think this is you, but yeah, you and I agree. I'm with you. Totally. If you have a channel or a website, please put it on. Love to see what you're all about. Scion Ken, I get it. Yeah. And again, you do you, I'll do me. I hope you make more money than you expected to make. And same thing for me. But keep expressing how you do things and how you want to do things, how you think the best way of doing things. I totally respect, what you're trying to do and appreciate you sharing it. ISRG are leaders, but the stock doesn't come down in price. All right. So ISRG. Oh, Intuitive Surgical. Yeah. Yeah. I have followed these guys. This is a known commodity. Now, I've looked at Intuitive Surgical, and I don't remember ever liking this stock. Like, wow, this is a really good buy. PE is 85, 70. This is a well-established company. They have been doing well, up 57%, right? When we look at their financials, really nice revenue growth. See, the free cash flow stinks. 586 million. Let's round it up to 1 billion. You have to multiply it times 189 to get to the market cap. Why aren't they making any more free cash? What is the problem? Margins are good. What is the problem with free cash flow? So they have profits. Inventory buildup is negative. That's a big negative. They just don't produce a lot of free cash flow. Their CapEx. I think these guys are, it's kind of like the example I would put out there is utilities. I don't invest in utilities because it seems like they have to put so much capital expenses into their power generating facilities that you're like rebuying the system, rebuying the business through CapEx every 2 to 3 years. It's like there's no free cash left for the shareholders to receive in dividends, buybacks, just to have cash on the balance sheet. And if these guys have to put that much CapEx back into their business, maybe it's not that great of a business. When we compare it to these guys, and these guys might even be acquired by Intuitive Surgical. I can totally see that. They're like, hey, you're really good. We're going to buy you. See, their CapEx isn't too bad. Hopefully they can get their CapEx, control it and have this free cash flow be a really nice chunky number in like 4 years. All right. Good conversation around those. Yeah, shoot me an email and we'll go from there. All right. So we took a nice lap around the stock market through those stocks. Good ideas, guys. Good stuff. Good stuff. All right. So just a reminder, in case you joined, if you like what you're seeing, you want to join us over the weekend. Tomorrow we're going to have a workshop where we are going to go over some investing topics, and it's a little bit more of like skills, development discussion around, hey, how do we look at free cash flow? Hey, how do we look at the balance sheet and so forth? We went over the income statement last Saturday as an example. If you become a paid member, you can attend, and 3 levels. If one works for you, it'd be great to have you. We also get together on Sundays and have a conversation. It's a conference call. We get, we talk rather than a live stream where it's just chat and me talking. Would love to have you. Please consider it. And consider joining us on Discord. Be great to have you. Some of the names that you're seeing on here, go on the Discord. I know Mike's on the Discord and Kiter's on Discord, and they have a lot of good stuff to say. I'm on it. We share, what's going on with our portfolios. I think it'd be interesting for you to join it. Just be careful. A lot of scammers on Discord, so be careful when you join. All right, so the NASDAQ still down a bit, almost 2%. S&P's down. Dow's down a little bit more. So it's going to be a red day. Are we going to be red for the week? Let's take a look. So the week started, this week started on the 23rd, right? So we're barely green. And we had a stupendous Tuesday. So we're back to even. So we'll see. We'll see how these days play out. We have a full day of trading today. Volumes are lower than typical. We're going to have a trading day on Monday, trading day on Tuesday. And then we reset. We reset and start focusing on 2025. Man, time flies. All right. So let me look at a couple things here. Let's look at the big caps. Apple, again, defying gravity. Doesn't care that the stock market's down. It's up. Nvidia, wait a second, this doesn't sound right. I thought Nvidia was down a little bit more. Maybe I need to hit refresh on, I think I need to hit refresh on this. User error. Sorry about that. So they're all down. So Apple's down, Nvidia's down, Microsoft's down, Google's down. These are my two biggest holdings. So these, I own all three. Okay. Tesla's down, Broadcom's down. Wow. Got to go way down here. Novo Nordisk, healthcare. Healthcare's having a good day. All right. Well, we got to have some of these days, man. We got to trim back some of these valuations. $4 trillion is a lot. That's a lot, man. And one company to have almost a $4 trillion valuation is freaking nuts. And Rotel and Cheese, what time do you have your meetings on the weekend? Saturdays, it's at 9:30 Pacific. And then Sundays, it's at 9 a.m. Pacific. And that's up for change if like the community is like, hey, can we do a different call like in the evening? I'm totally game for that. The calls have been going really well, so I'm just going to kind of follow the lead of the community. So yeah, I did see Zscaler was down. I picked up some Zscaler yesterday for the first time. I'll probably buy some more today. That's why dollar cost average is if I would have put my whole investment in yesterday, I'd be like, wow, I kind of wish I would have bought some shares today. So I'll buy some shares today. I'll buy it on for the next couple weeks, build it up to about 10 grand, and then we'll go from there. But I like Zscaler for a couple reasons. And I've done a couple videos if you want to check them out on the channel on why the valuation of Zscaler is really good. All right, everybody. Well, that was fun. I hope you enjoyed it. I hope you found it interesting. And I really appreciate you joining, having good questions, and going through that. And hope to see you guys on the next live stream. I'm going to live stream this evening, the after hours live stream, starting at 7 p.m. Eastern, 4 p.m. Pacific. And I'm going to do a little bit of the highlights of what I thought were the best stock picks that came up in the chat through the week, and kind of cover those. And anything, of course, if you guys have any requests, we'll handle those. And then we'll call it a week. And then move into the weekend. All right, everybody. Thanks for joining, everybody. Have a really good day, and go find some good stocks to buy on this down day if there's any good buys out there. And have a good day. Take care.